Good morning, good afternoon, good evening, whenever you are. This is another part of Become cTrader Master. And today we are going to talk about the trend lines. Yes, we are going to talk about the trend line. One of the key technical analysis features features and tools that trader should know, especially if you are the beginner trader. Let me then at the very beginning change the let's say change this chart. I will use the fresh one, euro to dollar. This is 1 hour time frame chart, and this is the chart that we are going to use, I guess, for the as an example when we talk about the trend line. So what is a trend line generally, and how do we draw the trend lines? So the trend line is very easy recognizable line that trader can draw on charts to connect a series of the prices together or show some data best fit. The resulting line is then used to give the trader a good idea of the duration of the a particular market move and the direction in which an investment value might move. So the trend line on the chart is a line that is drawn over swing highs or swing lows, under the swing lows, to show the prevailing direction of price. Trend lines are a visual representation of support and resistances in any time frame, and they show direction and speed of price and also describe patterns during periods of the price consolidations. So generally, if you want to sum up this introduction, we can say that the trend lines are basically trend lines can indicate the best fit of some data using a single line or curve, right? Single trend line can be applied to a chart to give a clearer picture of the trend, and the trend line can be applied to the highs and the lows to create kind of a channel. We talked about the channel last time. The time period being analyzed and the exact points used to create a trend line can vary from trader to trader. So different traders have a different approach to drawing the trend lines. So how to draw a trend line in cTrader? If we stick to our, let's say I'm going to change our chart to, let's say, Australian dollar to the US dollar. This is a 1 hour time frame chart, and we are going to draw a trend line on this chart. So let me just zoom out in order to see one more thing. There you go, there you go. Okay, so if we zoom in, we can clearly see that this low here might be considered a swing low, because there is a series of another swings that is going higher and higher and higher. So this one here is definitely the lowest one. So what we are going to do is to visualize the trend line by connecting the lows. So this is our low. We are going to use this low as our starting point. And as you can see, if you go to this menu here, menu is called lines, you can see the trend line is first one option for you. You go to the low, click, and then just grab it and move this trend line in order to draw a line. This is how it's supposed to look like. Okay, so let me just move it to the swing low. And now what we want to do apparently is to connect the closest levels on our chart. Please take a look here. This is the closest low. We connect it. Then the market goes up. We have a correction again. Look, it's being closed, hit again, move to the upside, consolidation, move to the upside, consolidation. Let me just extend this line. So we're going higher and higher and higher. And look, there is another hit. So first touch, second touch, third touch, almost fourth touch, another swing high, right? So swing high, swing high, swing high, higher low, higher low, higher low, higher low, and then we got another swing high, and the trend line is broken. Okay, so what does this trend line tell you? First thing is that the trend line is among the most important tools used by the technical analysis. Instead of looking at past business performance or other fundamentals of a certain asset, the technical analysis look for trends in price action. Okay, a trend line helps technical analysts to determine the current direction in market prices. So the technical analysts believe the trend is, of course, your friend, and identifying this trend is the first step in the process of making a good trade. So to create this trend line, as I said, we need at least 2 points on the price chart. So what I use is extreme overprice, which means that I use the swing low. Okay, let me just, there you go, move it a little bit higher. I use the extreme of this price here. Let me just show you this level here, exactly. And then I have connected this, my trend line to the next low. And then this trend line projected into the future showed the touch here. Then it almost touched here. Then we have the other touch. And as you can see, or the touch or the hit. And then when you take a look here, we can see the swing high and then breakout, definitely breakout below this trend line. So basically, I started doing this. This is my initial trend line. So if I don't know the future, there you go. I don't know the future. This is my initial trend line. This is how I do it on the hourly chart of the Australian dollar. Prices goes up, still above the trend line, still above the trend line. And then, of course, this is just educational example. So we know that, yes, let me just apply it once again. We know that the market went up. Nothing wrong with this. This is what we apparently want from the market to do, right? So let's take a look at this. All data we have is that. For example, we have the low. This one looks like a potential higher low, and the market starts to go up. And we see market going up, going up, going up. Very nice. Our trend line works. Our trend line works. Market goes up and up and up, goes up, goes up. Initially, look, our line is still in the future. Boom, we have a hit. We have a hit here. And then green candle. And then the market again bounces from this level, which means this is our low, first point. This is our second point. This is our third point. Okay. So what makes trend lines so universal is usage and appeal is they can be used to help identify trends regardless of the time period, time frame, or the interval trend. Okay, this would work exactly the same on a daily time frame chart, on a weekly time frame chart. It doesn't matter. And then we go up, almost have the hit here. We are still, look, the price is still above the trend line. So the uptrend is being continued. Yes, uptrend is being continued. There you go. We almost have another hit here. Then there is breakout below first, and the second bar is showing us, there you go, we have a breakout. So what this kind of a price action tell us about the current trend? This uptrend might be terminated, or there might be a time for a pullback or correction. Okay, so there you go. This is our trend line on the daily, sorry, on the hourly time frame chart. So as you can see, trend lines are relatively easy to use. Okay, so there is not a problem to apply it, the trend line to the chart. The trend line that we are considering shows the uptrend in the Australian dollar to the American dollar, and it can be thought like a support level, both in time and in price. Every time the price touches this line, the trend line. I don't know if this is very much visible. Let me just use my favorite color to see the trend line, which is, of course, which is the blue one. Sorry, yellow one, of course. Yeah, there you go. This is the trend line. So basically, the practical use of the trend line is that every time the market hits this trend line, it can be used as an entry point to trade in the according to the trend that is prevailing on the market, which is, of course, right now the uptrend. Okay, so every time the price touches that trend line, this might be a good chance to enter a position. Okay, this is for the educational purposes only, but the practical use of the trend line is exactly like this. This is a classical point of view. This is the classical rules of a trading using the trend line. Why we do the analysis according to the trend line? Why we trying to identify what kind of a trend is right now dominant trend for a certain asset is exactly for this, for the moment that we are going to trade, enter a position in line with the trend, prevailing trend. Of course, if the price action breaches the trend line to the downside, the trader can use this as a signal to close the position, of course, right? So another very practical use of the trend line is to close the position. This allows the trader to exit when the trend they are following starts to weaken. Okay, it doesn't actually mean it will reverse or it will be terminated. It just possibly starts to weaken. Okay, if you take a look here, there is a very often let's say witnessed situation on the forex market. It's when we have a breakout below our trend line, but then the market resumes the rally, resumes to trading up, and sooner or later the market hits this trend line again, despite the fact that it was violated. It doesn't matter, it was violated. Okay, the trend line is still here. The trend line still exists on the on the chart. Okay, so it's being tested. As you can see, the market consolidates, goes a little bit lower, and then eventually, if we take a look here, the market continues this up move even higher. I'm not quite sure if I will be able to draw it very precisely, but it's supposed to now look something like this. Very nice trend line. As you can see, market trades above the trend line, then there is a breakout, and now this trend line is only used to test it, and every time the market tests it, hits it, it's supposed to go lower. So during this part, before the breakout below the trend line, the price behaved as the trend line was the support. When there was a breakout, the price behaved as the trend line is a resistance. Now, what's happened when the market breaks below the trend line? Well, from our point of view, we can treat this kind of a situation in our favor and try to place another trend line. So if we use this low again, okay, this time I will make it white. So we are using the same low. Where is my? Oh, sorry, disappeared. If we use the same low as our starting point, and now we drag the trend line to the level that it was violated. Okay, so the low after it was violated is here. We need to adjust our trend line here. All right, and now we need to adjust our trend line once again. So we just have a hit here. All right, not a problem. Let's now make it white. Very nice. And now make it thicker. Like this. Okay, so you can see something very interesting. So the market will be treating this kind of a situation as this is our first point, swing low, and this is the second point. And we need only these 2 points here to draw a trend line. Okay, so market will use the white trend line as a support now. Okay, and please take a look how the market behaves, what the market does here. You can see it treats the white line as a support and bouncing up. The yellow one is being treated as the resistance, and then it goes down, bounces from the white one, goes up, almost hits the yellow, consolidation, goes higher, then again towards the white one, consolidation, maybe there will be a bounce to the upside again. Very good example of the strong uptrend, and a very good example of the market working for the yellow line and then working for the white line. Okay, so that's a very nice example of market behavior during the uptrend. So let me just find some market that is apparently in a downtrend because we know it already, and see how it's behaving. Let's take a look, for example, at the daily time frame chart of crude oil, CFD. Okay, so this is the crude oil, right? If we do this, we can clearly see that this market is trending down. Maybe it will be a good market to show you how the trend line works. Okay, let's zoom into our not that much. Let's zoom into our current market conditions. So what we choose first in order to draw a trend line? We got this high. There is no higher high in 2022. We got this high, which is lower than this one. So that's the first point. That's the second point. Everything looks very nice right now. So first point, okay, and the second point. So this is our trend line. We move it here, and now we move it here. If we click twice on this trend line, we got the context menu. As you can see, the menu is here. Let me just move it under the quick trade. And there might be an option. You see, it says extend to infinity. If we do this, the market will automatically extend our line somewhere in the future. So this is our line, and we want our line to be, this time it's white. Okay, so this is our big time frame trend line when the market looks like it's trending to the downside. Okay, so that's the first trend line. We can see that market went very, very sharply down. So the second trend line will be drawn from this high here. Okay, and we are going to move this trend line even lower. So this is our trend line, automatically is being extended to the future, and we change this color to the yellow. Okay, so let's just change the color to the yellow one. We will use this high in our situation, and let's just grab it. Let's do this one, and you can see here how it basically works. Very, very big slope, minus 63 degrees basically. This movement to the downside is. So if we zoom in, sorry, I wanted to zoom in, we can see how the market behaved with this trend line. You see it went down, hits the trend line, went down, hits the trend line, went down, hits the trend line, then again, went a little bit lower, then there's a breakout, fake breakout, going down again. And then of course, because there was a one fake breakout, the market doesn't treat this trend line so seriously, so it plays around this trend line. So what you can do in this situation, of course, is to move the trend line somewhere else. For example, this is our breakout. Yes, this is our breakout high, and then again we have the breakout to the upside, to the downside. As you can see, market doesn't recognize this trend line, doesn't care about this trend line. So let's use the other one. And as you can see, in that situation, lower lows are being made, lower lows are being made, unless the market violates the trend line, goes a little bit higher, almost tests this trend line from above, bounces from it, and then there is roughly completely different situation with this trend line. So we can still play with this to see where it goes and what it will show us. So right now, this is the next important high. And as you can see, almost hit here. Now we are moving around this line. So the market, after this happens here, market is not that serious about this, about this trend line. So applying it doesn't brings you that much good result, because the market doesn't actually place around with this trend line. Maybe there is something else the market participants are much more interested in. Okay, maybe some Fibonacci's, maybe some horizontal support and resistance levels. You never know, but it's very, very good to test the trend line significance for the market participants. The same situation can be applied here. We got this high here. Okay, very, very steep movement to the downside. If we apply it to the next swing high, as you can see, this is our downtrend trend line. So what we do now, we will move it to another swing high, and for example, this one. So this is how it works, and this is way, way, way better for this trend line to be applied on the chart. And then we have the breakout, and now the market doesn't know where it wants to go. So let's find out the other market. Let's see what is going on the gold market, for example. How does the gold market is using the trend lines on the daily time frame chart? Let me just zoom out, and as you can see, again, it will be a rather rather uptrend that we are going to apply the trend line. Very strong movement to the upside. So again, the slope of the trend line will be very steep, very steep. So if we apply it to here or something like this, you can see the market moves so fast that this trend line is not being respected at all. But we can use different points on the chart. We can, for example, use this one and project our trend line directly into the future. We have the swing low, for example. We have the second point. That's enough to draw a trend line. And right now we have a fresh new trend line projected into the future. Let's make it a little bit thicker. And this trend line might be very helpful next week, next 2 weeks, next month, next quarter. This is the time frame chart, so why not? Okay, so that's the situation when we can draw a trend line using 2 points only, not a problem. But you need to remember that this trend line is weak. This is how traders call that kind of a trend lines, because it has only 2 points. Okay, so in our situation, swing low and the second point to draw the trend line. When, if ever, of course, this trend line is hit by the third time, it makes it strong trend line because it's being recognized by the market participants and the market reacts on this trend line. This is much more important than just driving the trend lines all over your chart. There are some trend lines that market doesn't know there are. There are some trend lines that market doesn't respect, doesn't care. There is something else the market participants are preoccupied with. So you can draw 5, 7, 10 trend lines on your chart, and you might find yourself being a little bit frustrated that the market doesn't react on your trend lines. Okay, because it's not always you who is trading, and the market participants are very different. We all know the forex. What is the forex market structure? There are banks, there are central banks, there are hedge funds, there's retail traders, institutional traders, and plenty other people and institutions that are using different parts of the technical analysis, different methods, different approach. Just because you see the trend line on the chart doesn't mean that actually everybody else is seeing it. But the chances are pretty high that a lot of people is using the technical analysis, and a lot of people is using the trend lines because, as you can see, they are really easy to establish, easy to draw on the chart. They provide plenty of the information. They can be projected into the future to show the future levels of the support and resistance in time, of course, and price. So they can be applied in any kind of a market, in a uptrending market, in a downtrending market. They can be applied in different chart types as well. So I'm using the Japanese candlesticks, but if you want, you can use a bar chart. You can use a line chart, not a problem whatsoever. But every time you need to adjust your trend line accordingly to the chart you are using. Okay, so in our situation, it would be something like this, for example, right? Not a problem to use it. Provides plenty of the information and allows you to trade with the trend, which is one of the most widely recommended market and used, maybe not recommended, but used market strategy, market approach by various market participants, by traders, investors. It doesn't matter if they come from the retail sector, if they come from the big institutions, there is nothing wrong with using this kind of a trend lines by them whatsoever. So I really encourage you to use the trend line in your trading, to use it, to learn how to use it. There is plenty of the possibilities to explore the cTrader technical analysis tools, technical analysis features. One of them is the trend line, one of the easiest one and very informative one as well. So enjoy using it. Hopefully it will make much more clarity and much more information, much more maybe comprehensive picture to your trading analysis, to your scenario that you are planning to adapt to your trading, to your trading strategy, and any trading related stuff, of course. So use it in your trading. You learn how to use it, apply it to your trading. You will see after just a few tries plenty of the advantages of this kind of technical analysis tools. It is available in cTrader. When you click here on the under the lines menu, the first one on the top is a trend line. Thank you very much for watching this webinar. Of course, it was my pleasure to give you the information about the trend lines in the cTrader platform. I hope we will see each other next week. For now, thank you very much, guys. Take care and bye-bye.